Good evening, everybody. It's Matrix here, and here is my trade recap that I promised I would make yesterday. I finally have time to come back and make the recording. It's December 19th right now, and it's almost 6 o'clock here, but here's that trade recap that I took, the one trade I took yesterday on Apple on December 18th, and I'm going to show you guys what I did. So basically, I know I have told you guys a lot of times that I usually don't trade uh, after 11:30, but lately, I mean, if you look at the charts on all these larger cap stocks, there's one thing that we've been noticing that is that lately, for the past week or so, or the past few days at the very least, what these tend to do is they tend to pop in the morning and consolidate it. By the way, this is my trades. I'm going to bring this back in right here, but I want to zoom out real quick here. Like lately, what the day has been bringing us is that stocks tend to pop up early in the morning around up to the 11 o'clock to noon area. So by 11:30, the real dump doesn't really happen until lunchtime hits, right? So as you can see on the Apple chart, it happened here. It happened here on this day as well. See how it ran up. It didn't really dump until around 1:30. And even here on this day, even though it gapped down, it was really choppy in the early day, right? And then it didn't really actually made the big move until at 1 o'clock where it dumps, right? And then here as well, we have a big run, and then it didn't make the move until noon. So that's what these type of charts have been following. I mean, let's take a look at a few more examples here. Let's look at NVIDIA. Look, they all pop up in the morning, and then it didn't happen till late day right here, like this double top right here. It didn't happen until the 1 p.m. This drop didn't happen. Well, it's still late, around 11:30, and then it started from here at 11:30. This is the first significant lower high, I guess, and then it dropped and then it tanked. Let's take a look at like even on this day right here, right? So it didn't double top until like the 12:50 mark. So let's take a look at Facebook as well. Yes. All the big tech stocks and the FANG stocks you'll probably see. Oh, you know what? My account logged out, so let's log back in. Okay, so Facebook. Taking a look here. Lag. Okay, so Facebook. The real big move didn't happen here on this day until noon, and then yesterday didn't happen until 1 o'clock as well. Here, this big dump didn't happen until 1:30 or 1:50. So basically, that's the pattern we've been looking at. So hence, as traders, I mean, we need to adapt, right? And adapt to the environment, adapt to the trading conditions. So here is that Apple from yesterday, okay? Well, excuse me, zoom in real quick here, right here. So Apple ripped yesterday, it consolidated around the highs, and then basically from noon, it tanked. And I basically missed this first tank, right? Is this yesterday? Hold on, let me make sure this is yesterday though. Right here, this day. Right. Okay. So Apple, I was watching this and I didn't even plan to be trading, right? I basically told myself that I was going to take a few days off, but I know in the back of my mind that this is what the past few days been happening. Is basically stocks run up, consolidate around the highs, and then dump near the end or late lunch. And this is exactly what happened. I was watching this, and basically I saw Apple topped out right here, and I was still just watching it, and we can draw like a really nice, decent trend line right along here, right? I didn't take the first trade until this big down move happened over here. So let's bring in my entries and exits here. So my first trade happened here at 165.40 and at 252. So what I did was I was trying to join trend, and if you look in my video watch list on my YouTube channel, I was basically trying to join this trend. I saw it dump out already, and I was trying to join trend. I saw it come down under the VWAP. It was weak, and it was actually getting a little bit overextended. But my idea was to see it join trend, and basically I was looking at this downtrend here. More so, I was watching this downtrend line, and I'm going to mark it off right here with a different color. And as I was seeing this come down, I was looking for the next resistance level. I was anticipating for it to pop back up and retest something, some form of level, right? So if I were to zoom back out right here, this is what I was watching, right? I can't see the future, but I was watching this come down. And if I were to zoom out a little bit more, that's all the chart history I had. And the first line I saw was basically somewhere around this area right here. And I'm going to mark it off in red. So we have 165.75 right around this area, 165.75, 165.80s when I was looking at this chart. And as you can see, in the morning it popped here. It had a lot of resistance. It tested. And then here, this is where it broke out as well. Okay, so this was the key area I was focusing on intraday. It was also, it literally just went green to red, all right, on the day. So it dropped under the VWAP. It dropped under yesterday's closing price. Wait, this is not yesterday's closing price. But let me see where yesterday's closing price was. Here, after hours. Closing 165.6. Okay. So 165.6. Oh no, that's the pre-market opening price. Right here. 164.25. 164.25. Let's bring it down here. Okay, so this was yesterday's after hours closing price. Let's mark that off with a white line. Okay. Okay. So this was the target I was looking at. I was looking at for it to snap maybe 165. So I had 165 marked out, which is a psychological whole number, a key psychological whole number. And then I also had the low of yesterday marked out, which is around the 164.70s area, right? And then I was watching this. Okay, so let's load up the drawings and also where I took the trades. Okay, so I was looking to join trend, and as I was watching this downtrend, I was looking for a resistance level of how the stock was gonna come back up and reject some form of prior resistance, because this big move was gonna retrace for sure. I was anticipating that, and then once it got back up to a resistance area and then start failing, that's where I was gonna take the trade and join the trend, and I was gonna look for the target of 164.24. That was, or 164.25. That was my initial target, right? But my first target was a key whole number of 165 and also 164.5, I believe. Or yesterday's lows, 164.67. All right. So as it came down, here is my first entry. I saw it come back up, and it tested this area of 165.5. Okay, it popped over, and I was a little bit hesitant, but as I saw it fail 165.5 right here at this mark, I was basically watching this. as I saw it failed on this candle, as it broke the previous candle, and it broke under the 9 EMA. This is where I took the trade exactly, and I got in at the average. I got in at the average of 165.4 at 100 shares, and my risk was a little bit above the prior green candle right here, right? Okay, and I also had this was a very tight risk because it was like about if it reclaimed 165.5 and started holding, I would have gotten out. But this was like my just off my eyeball taking a look at it. This was my risk here. So as it I took the trade, it popped, it failed that 165.50 area, and then I was basically just holding it. Now on this candle, it tested this 165. Okay, it popped right down and came right back up. So as it did that, I basically took some, and I had that big picture target in mind. I was thinking about the stock coming down here, so I only took a little bit. I only took a quarter here. I covered a quarter, and then the next candle, it popped. It opened sideways. It popped right back up, right? So that kind of made me emotionally unstable, and I was thinking, oh god, it's going to hold 165. If it gives me a chance, I need to pay myself a little bit more. So it actually did give me another chance, so I did pay myself a little bit more. From there, I took half off of what I've left. So 75 shares, half of 75 is 37, so I took half off and paid myself a lot here, and then I just rode it, and then it came down, hit my target of 164, the yesterday's lows. All right, and then I didn't pay myself here because I was basically holding 38 shares left, right? So I was content of letting it ride to the lows and hit my major target. Okay, but so I didn't pay myself here, and then it popped right back up on me. But I did have this trend line drawn out, and basically it respected the trend line, so I held it. It came down, and as it came down again, this candle opened sideways, and it popped back up and tested. It looked like it wanted to reclaim the 165, so I held on. As it came back down, I'm thinking to myself, all right, I need to take this because this candle's not really stable, and I paid myself one more half. Okay, that left me with 19 shares. From then on, that was basically it. 19 shares. I was very content with whatever I had left. I was gonna be really convicted of and letting the rest ride. Now this candle popped up. I held through, and I was thinking about paying myself or taking the whole thing off as it broke this trend. But on the very next candle, I wanted to wait and confirm this trend break. On the very next candle, it opened down and dumped. So I held it. And then on this candle, it dumped. I didn't pay myself because it hasn't reached my target. I was just watching it. And then we have a trend break again, but it failed the 165, and then failed the 165, and failed the 165 one more time. So basically 3 times. So I held it some more even though the trend broke. So after that, I moved this trend line, and I moved it. After I saw this 3 taps here, this 3 fails, I moved the trend line, and I moved it to this area here, and I used this top instead of this prior top. Okay, and I was watching it, and I was watching for the trend break to get out, and basically I saw this higher low, right, and then I saw it break trend. The next candle, I wanted to wait and confirm, and it did. It opened sideways and popped, and as it came back down, I basically took the rest off here. Now, when I took this off, let's take a look at my exit price. When I took it off at 165.17. I could have given it more room to my entry price at 165.40 right here. I could have, but I didn't because I didn't really want to take the loss. We were running into this 50 EMA here, and I was very adamant on locking in as much as I could, so I basically took it right off. Now, let's scroll forward. I thought about holding it and see what the 50 EMA does, right? And basically, it did reject a few times, but then it came back down. And as I saw this come back down, I was already kicking myself in the head because I saw it fail the 165 again. But lo and behold, this 165 got scooped, and zoom out a little bit. And basically, that was history. It popped right up and ended the day on a big spike and fail here. Okay. So all in all, I mean, it's an okay trade. It's not something super exciting. I got 50 cents out of it. Um, all the way to lows from my entry. This was $1. The low of this candle was 164.40. Okay, and my entry was 165.40. So all the way to lows, I did get a point from it. That that would have been nice if I could have picked the bottom, but it's just not possible. I mean, at best, I would have been exiting right here instead of giving up another 40 cents here. I could have took it right here as the trend broke, but then I wanted to wait for the confirmation, right? This candle was massive. So very important that you pay yourself along the way. So even though this candle happened, it only happened to me on a very small piece of 19 shares left, right? So basically, my gains were very much intact, and that's a big lesson: is to pay yourself along the way during the trades to protect yourself from these type of movements, from these candles, because when the candles break trends, they squeeze, and they squeeze really hard, and you always and you also want to wait one more candle to make sure the trend break is confirmed, right? So as I waited and I made sure it's confirmed, I basically kept my gains because I had so little shares left. So the biggest lesson here, how to join the trend, right? I made a video lesson on that, how to join the trend, and also pay yourself along the way as it reaches your target. So you need to know where your targets are, where you pay yourself, and you also, as according to the plan, you need to also know where to stop out. Now, ideally, the perfect stop out situation would be right around here. Your stop should be set a little bit above the prior high, which is here. But I mean, you can also set it right here where I set it as well, because this was previous support, now becomes resistance. You see how it came down, popped up, and snapped this little support line here, and then came back up. Now, previous support now becomes resistance, hence I risk a little bit above over here. And I had a very nice tight risk. I mean, this was 165.60. So I had like a 20-cent risk, and my potential gains was $1. So potentially this could have been a 5-to-1, but I made 50 cents. So I did make about a 2.5-to-1. So that's not bad, 2.5-to-1. And basically that's my trade. Now, I hope you guys like what you watch. I hope you guys caught some lessons from here on this trade recap. As you can see, Apple tanked today along with the SPY as the Fed speak happened right at 2 o'clock. And last night, both my mentor, Trick Trades, Patrick Mitchell, talked about getting out of your positions uh, before 2 p.m., before the Fed speak. And I talked about it as well on my watch list. And we were anticipating this rate hike, and we actually saw this happen way prior to the night before. We kind of knew it was going to happen. And you see Apple tanking along with the SPY. Now the SPY we are officially in bear territory. Okay, we have broken under February lows. All right, and if we were to draw a downtrend, let me open this chart up a little bit here. From 2009, from where the recession is, we were to draw this trend line, basically. Kind of right there. Yeah, yeah. If we were to keep this trend line on, I mean, there is still another 10 points to go for the SPY to come down to meet this trend line. This is where I would probably anticipate the market to bounce right at around the 240 level, just bounce a little bit, and then we could test it back up at 250s and then come down some more. And yeah, basically we are in a bear market now. Um, what's going to happen tomorrow? Well, I'm not going to talk about it right now. You guys are going to have to pay attention to my watch list later on tonight. But I hope you guys like the recap that I just made and that I promised that I will make. And I didn't trade today. I will tomorrow though, and on Friday. And look out for those recaps as well. And have a great evening. Ciao.